Does it make sense to pay off your mortgage if you lose the mortgage interest tax deduction? This is a common question people struggle with who are considering paying off their mortgage early. Will my paid off home be worse for my tax situation? It's no wonder this is a common question. Unless you're a tax professional, taxes are super confusing. For most people, this is a real question that people should know the answer to before going down the mortgage freedom path. Let's break this down into two questions today. The first question is, will I even receive a mortgage interest tax deduction this year? And the second question is, if I will receive a tax deduction, is it more financially advantageous for me to keep my mortgage rather than paying it off? Before I jump into the video though, if you like what you hear today, please consider giving me the YouTube triple thanks. That's hitting the like button, subscribing to the channel, and then commenting down below. I appreciate your consideration as I'm growing my channel this year. That support would really help. Thanks. Okay, let's start with the first part. Will I receive a mortgage interest tax deduction? To find out if you will receive a mortgage interest tax deduction this year, let's first discuss the 2017 Tax Cuts and Jobs Act that changed things around a bit. With the passage of this act, the standard deduction increased significantly. It was around $6,350 for single filers, and for single filers this year, the standard deduction is $12,550. And for married filing jointly, it went from $12,700 to $25,100 for those filing their taxes this year. I'm gonna stick with the married filing jointly numbers because of the whole marriage, kids, and money thing I got going on here. So this overall change decreased the need to itemize mortgage interest deductions for the majority of Americans. As an example, let's say Diana and her spouse pay around $6,000 in mortgage interest this year. They also give $7,000 to charity. Their total deductions come out to $13,000. Since they are married filing jointly, their total deductions fall below the standard deduction. It makes more financial sense for them to take the standard deduction. They will save more money on taxes this way. Now, let's assume Diana and her spouse decide to go mortgage-free after years of paying down their principal. Their mortgage interest deductions would be $0, and let's assume their charitable nature continues at $7,000. So their total deductions come out to $7,000. Again, well below the standard deduction. So in both cases, Diana and her spouse would not receive any more special tax treatment because they kept their mortgage. Now, are there other things you can itemize for deductions when it comes to tax time? Yes. According to the IRS, itemized deductions include amounts you paid for state and local income or sales taxes, real estate taxes, personal property taxes, mortgage interest, and disaster losses. You may also include gifts to charity and part of the amount you paid for medical and dental expenses. This could be a factor for some Americans on a special year, but on a year-to-year basis for the everyday American, not really. To see how the newer standard deduction affects your tax situation, I'd suggest answering these quick questions and calculating the result. How much did you give in charitable donations this year? How much was your annual mortgage interest this year? How much student loan interest did you pay this year? How much did you pay in the other categories I mentioned earlier? Total these up and see if it's higher than the standard deduction. If you're below that level, keeping your mortgage for the tax deduction benefit doesn't make sense. Again, if your deductions calculate to be below the standard deduction, you are not saving anything extra by keeping your mortgage versus paying it off early. Now, could Diana have a much higher mortgage interest than described in my example? Absolutely. According to Business Insider, most Americans don't though, but let's just say for Diana's purpose in question 2 that this did happen. So part 2, my total deductions are above the standard deduction. Is it worth it to keep my mortgage for the tax savings? For most Americans, the answer will still be no. According to Bankrate.com, 90% of Americans opt for the standard deduction when they file their taxes. So for the 10% that don't take the standard deduction, is it worth it to keep their mortgage for the tax savings? Let's say Diana and her spouse paid $20,000 in mortgage interest last year and gave $7,000 to charity again. Since their deductions are over the standard deduction, it makes sense for them to itemize. That additional $1,900 of deductions will lower their taxable income by $1,900. Let's say they're in the 24% tax bracket and this saves them around $500. Their total out-of-pocket cost for their mortgage interest is now around $19,500 instead of $20,000. That's pretty cool. But if they were mortgage-free, their total out-of-pocket cost for their mortgage interest would be $0. Paying $0 in mortgage interest is better than $19,500, in my opinion. So based on these financial breakdowns, I believe in most all cases, when it comes to the question of should I not pay off my mortgage because of the mortgage interest tax deduction, I say heck no, pay it off. Not only will you experience better financial benefits, but you'll also receive so many emotional benefits as well. Let's briefly discuss 5 of those real-life emotional benefits that can come with mortgage freedom. Number 1, the ability to go down to part-time work. When our family became mortgage-free, we owed a lot less money each month. Since we owed a lot less money each month, we didn't need to make as much money each month. Therefore, we could change our work situation to better align with our family values. For us, that meant my wife, Nicole, going from full-time work to part-time work. This was at a time when she wanted to spend more time with our kids. Or more recently, I went from a stressful 40 to 50 hour per week job to a 25 hour per week business that I now own. I'm more present with my family and my kids, and I have more opportunities to pursue hobbies and interests that I enjoy. Number 2, reduced decisions. You know how we're constantly making decisions all of the time? There's something to never worrying about something ever again that's emotionally refreshing. I will never again worry about paying my mortgage. I will never again worry about refinancing my home when rates go down or up or sideways. It's done. This is a decision our brains will never have to worry about ever again. Number 3, ownership pride. Owning anything outright can just fill you with personal pride. I remember when I bought my first bike as a kid. I felt proud. The same goes with my first car that I bought with cash. The car just drove differently than my previous lease cars. My paid-for home? Oh man, I feel that ownership pride through and through. I want to care for it more. I want it to be a place my kids will always call home. Mortgage freedom gives me more pride in my home than I've ever had before. Number 4, retirement isn't as stressful. Between our family achieving coast fire and our mortgage freedom, a comfortable retirement doesn't feel so out of reach now. Our investments will continue to grow to provide us the income we need to enjoy in our retirement, and our paid-off home will always give us somewhere to live. I'm looking forward to retirement, but knowing that I love my job, I'm not so much in a rush anymore. Number 5, showing my kids how to live free. I love that our kids have seen us go on this mortgage-free journey. We even celebrated the big victory with them by smashing a mortgage piñata filled with candy and prizes. It was made up of the mortgage papers. They remember that celebration fondly, and I'm hopeful that they will want to experience the same sense of freedom we have as well. That way our family tree will continue to be strengthened for generations to come. Oftentimes the pay off the mortgage versus investing debate usually sparks up after I publish a video like this. How can you pay off your mortgage with rates as low as they are? Are you insane, man? You should be investing in the stock market. Well, to save you time, we paid off our mortgage early and we invested in the stock market. And we currently invest in the stock market. That is something that needs to be discussed more, in my opinion. How can we do both? How can this be an and conversation? This can be done by using tax-advantaged retirement vehicles like the 401k, IRA, and HSA, and slowly but surely chipping away at your mortgage until it's gone for good. To be sure you're going to hit your retirement goals, I'd suggest hitting coast fire before paying off your mortgage. But it's not necessary. I didn't do that, and we're still in a very good position. To hear me launch into that invest versus pay off the mortgage debate more, please check out more videos on this channel and decide what path is best for you. I'll place those links in my show description as well. So those are my thoughts on whether people should keep their mortgage for the tax savings. I hope that helps you as you're deciding whether or not to keep your mortgage because of the mortgage interest tax deduction. But enough from me, everyone. Please tell me what you think. What do you think of keeping your mortgage for the tax savings? Are you pro-mortgage freedom or are you against it? Please let me know in the comments below. This is Andy Hill from Marriage, Kids, and Money, signing off. Carpe diem.